Having seemingly won the fight against inflation, the US central bank is cutting interest rates. You can see where we are on that journey too. The 0.5 percentage point cut brings down the cost of money, but the Fed is only doing it because it's worried about how much the US economy is slowing. Days after its most recent meeting in July, where it held rates, fresh data showed a rise in US unemployment and slowing job growth. The central bank's chair saying he might have cut rates then if he'd known. "We didn't make that decision, but we might well have," he said after today's meeting. That pessimism about the future fueling falls on global markets, apart from Japan, while locally we took the first cut to US interest rates in 4 years as a positive, with the ASX 200 hitting a new intra-day record. Now, it could be the weather or it could be that everyone's working. The participation rate and the employment to population ratio are at or near record highs in new data, which does make it less likely the Reserve Bank will cut interest rates here, because they're still worried our economy is a bit hot. Our dollar roared on the news of potential weakness in the US economy. Gold hovering near records too, backing up that theory about US weakness. The bigger picture is that we're getting bigger. Australia cracked 27 million people, adding 2% to our population in the past year, mostly through migration. Western Australia had the highest growth rate, and with the most coastline, it still shouldn't get too crowded over summer. And that's finance.